Hi, welcome back to Joe Blogs. In today's episode, I want to provide you with an update on what's happening with the Russian economy. And all of the data that I'm going to share with you today has been provided by the Ministry of Finance in Russia. So these are official figures. They're not estimates that I've put together. They're not my best guess of what's happening with regards to the sanctions. These are the actual figures. We'll start off by having a look at what's happening with gross domestic product, or GDP, which is universally recognised as a barometer of the health of an economy. And I can tell you that in Q1 2023, Russia's gross domestic product fell year on year. We'll then have a look at the revised forecast produced by the Ministry of Finance in Russia for 2023 and 2024. We'll also have a look at what the IMF and the World Bank are saying is going to happen to the Russian economy, because the World Bank has recently revised its forecasts. We'll then have a look at what's going on with the current account surplus. And the current account is basically the difference between the value of all of your exports and the cost of all of your imports. So it's basically like your checking account, whether you're in a positive position or a negative position. And the situation from Russia's perspective is deteriorating rapidly. We'll have a quick update on what's happening with the Russian ruble, and then we'll have a detailed look at the results for Q1 2023 in terms of oil and gas revenue, income tax, and all of the expenditure that's going on in the Russian economy right now. And then finally today I'll wrap up with my summary as to what I think is going on in the Russian economy and what the concerns are for the rest of 2023. Now, we talk a lot about gross domestic product on the channel, and I wanted to take a slight step back and just go through the definition of what gross domestic product is, because it's one of those terms that's thrown around a lot, but nobody ever actually explains what it means. Gross domestic product measures the market value of all the goods and services produced and sold in a specific time period by a single country. And GDP is most often used by governments to measure the economic health of that economy. So if you're thinking about GDP in accounting terms, it's very similar to turnover. So if you look at the turnover of a company and it's growing year on year, then you would think that company's doing pretty well. But of course, one thing to bear in mind is that GDP doesn't take into account the costs. It doesn't look at what a country is spending. And of course, that's one of the biggest issues that Russia has right now. It's spending a lot of money on the Ukraine war and on defense systems. So Russia really needs GDP to keep growing, to keep funding its ever-rising expenses. Russia's finance ministry have announced that GDP on an annual basis contracted by 2.2% in the first quarter of 2023. And this contraction compares to 3% growth in the same period last year. So that represents a negative swing of 5.2% year on year. In terms of the forecast for the full year of 2023, Russia have recently revised upwards its GDP forecast to 1.2% growth from its original forecast of 0.8% contraction. However, at the same time, the ministry lowered its forecast for 2024, mirroring a wider trend that envisages more sluggish long-term prospects for the Russian economy. Russia is now forecasting GDP growth of 2% in 2024, which is down from the previous estimate of 2.6% growth. GDP in the Russian economy fell by 2.1% in 2022 as a direct result of Russia's invasion of Ukraine, and this fall in GDP compared to the original forecasted growth of 3%. So the actual results for 2022 represented a negative swing of 5.1%. The Russian ministry, which is focused on bringing about a recovery in consumer demand, raised its forecasts for retail sales, real wages and real disposable incomes in 2023, but lowered them slightly for 2024. Unemployment is set to remain at a record low of 3.5% through to 2026. Economy Minister Maxim Reshetnikov said demand will recover both as the population's propensity to save is normalised and as consumer lending grows. So Russia is now forecasting GDP growth of 1.2% for 2023. And I thought it was worth comparing that to the latest estimates by some of the big research agencies. And this chart shows the latest forecasts by the World Bank, the IMF and the OECD. The large red dotted line at the top of this chart represents the World Bank figures. The smaller red dotted line represents the IMF figures, and the blue line represents the OECD figures. So as you can see, all three agencies actually have different growth rates in 2021 and 2022, so their estimates are not the same, which is why we've got three different lines on the chart for those years. So if we look at the figures for 2023, the IMF is actually forecasting an increase in GDP of 0.7%. It's the only agency in the world that's currently forecasting the Russian economy to grow in 2023. The World Bank has recently revised its figures. Previously, it was expecting the Russian economy to fall by around 3.3% in 23. However, it's now saying that it expects the fall to be limited to 0.2%. So that represents a net improvement in the forecast of around 3.1%. Now, the OECD is still forecasting the Russian economy to fall by 2.5% in 2023. So they're the most pessimistic out of all three of these agencies. But as you can see, all three of these agencies are far more pessimistic than the Russian Finance Ministry. Now, before we go on any further today, I want to talk to you about today's sponsor, Atlas VPN, and to let you know about their amazing 3-year deal whereby you can get full coverage for only $1.83 per month, including an additional 3 months extra and a no-risk 30-day money-back guarantee. If you use the internet without any form of protection, you leave yourself exposed to tracking, hacking, and advertising. Using Atlas VPN protects you from all of these. Atlas VPN provides you with comprehensive security and is used by more than 6 million people worldwide. So it's fantastic news that it will protect you from hacking and tracking and data breaches. But what's also great news is that it can save you money and open up a whole new world of entertainment, because it allows you to change your location, which gives you the opportunity to get better deals and to access content that may not be available in your region. Atlas VPN is available to use on unlimited devices for one subscription, and Atlas VPN is currently offering an amazing 3-year deal whereby you can get full coverage for only $1.83 per month, including an additional 3 months extra and a no-risk 30-day money-back guarantee. So to purchase this exclusive Joe Blogs offer, please click in the description below. As I mentioned at the start of the video, the current account for a country measures the difference between the exports and the imports. And obviously the exports represent all of the income for a country and imports represent the majority of the costs. They're the things that you're having to buy in. And this chart shows the value in billions of US dollars of Russia's exports and imports dating back to 2013. The blue line at the top shows the exports and the red line shows the imports. So as you can see, Russia is a net exporter. It's exporting large amounts of oil and gas and food products, and it's importing a variety of finished goods, raw materials and food. Now, if you follow the channel, you'll know that I've talked a lot about economies that are net importers, countries that have to buy in large amounts of fuel and food. And those countries have been suffering severely over the course of the last 12 months because the price of all of those products has gone up, and that has put additional strain on those economies. Now, Russia has a different situation. It's actually receiving more cash than it's paying out. And what that means is that Russia has a current account surplus. So it's basically building up a cash pile because it's spending less than it's earning. However, the current account only takes into account imports and exports. It doesn't look at things like defense spending and other things that an economy will be spending money on. So just because you've got a current account surplus doesn't mean that you've got surplus cash in the economy. And in terms of what's happening with Russia's current account, in the first quarter of 2023, the current account surplus has reduced by around 73% on a year-on-year basis. In the period ending March 2022, so right at the start of the Ukraine war, the current account surplus stood at $69.8 billion. However, for the period ending March 23, the current account surplus is now standing at $18.6 billion. So that represents a year-on-year fall of $51.2 billion. And in view of the current situation, the Russian ministry has now reduced its forecast for the current account for the full year of 2023 to $86.6 billion from the original level of $157.6, which represents a reduction of $71 billion, or around 45%. And economists from the Institute of International Finance have said that Russia actually had an excess current account surplus in 2022. So the surplus was basically a windfall, which was above and beyond the normal seasonal path for 2021 and 2022. And in a recent report, the Institute stated that 2022 amounted to a windfall of roughly 13% of GDP, which contributed to the flush liquidity in Russia's financial system. That windfall situation has now been completely eradicated, and the latest position for Russia's current account is below normal, which is one of the reasons why the ruble has weakened year to date. This chart shows the movement in the Russian ruble against the US dollar over the course of the last 12 months. And what this shows is that this time last year, one US dollar was trading for around 62 Russian rubles. However, between the start of May and the end of June 2022, the Russian ruble actually strengthened in value, and by the end of June, $1 was trading for around 50 Russian rubles, and this was seen at the time by a lot of commentators as confirmation that the sanctions were not working and the Russian economy was doing very well. However, there were also a lot of other commentators stating that the market for Russian rubles had contracted dramatically because the West no longer wanted to buy any rubles. A lot of countries were in the process of reducing their purchases of oil and gas from Russia, and therefore there was less demand for the ruble. And so as the market contracted, it became easier for the central bank to be able to manage the rate that it wanted the ruble to trade at by stepping into the market and buying rubles as and when they needed to. If we now look at what's happened between the end of June 2022 and where we are today, you can see there has been a sharp deterioration in the value of the ruble, and one US dollar is now trading for around 78 Russian rubles. And if you take a step back and look at the position for the last 12 months, the current period represents the lowest value that the ruble has been trading at. And if we look back over the last 10 years, excluding the brief period following Russia's invasion of Ukraine, when the value of the ruble fell to around 130 to one US dollar, there have only been 2 or 3 periods over the last 10 years when the ruble has been trading at these low levels, in 2016 and in 2020. So this clearly represents a problem for the Russian economy and is partly a reflection of what's happening in the Russian economy. The income line across the top of this chart is total income. And as you can see, total income in the 3 months ended March 23 was 5.7 trillion rubles, which equates to around $69 billion. And as you can see from the table, that compares to around 7.2 trillion rubles, or around $87 billion for the same period in 2022. And that represents a fall of around 21% year on year. Now, the figure on the far right-hand side shows the total budgeted income for the whole of 2023. And as you can see, it's forecast to be 26.1 trillion rubles, which equates to around $318 billion. So in order for Russia to be on track to hit that figure for the whole of 2023, they should have achieved around $80 billion of income in the first quarter. However, they've only achieved $69 billion. So that represents a shortfall of $11 billion in the quarter. And if you're breaking it down on a monthly basis, Russia needs to earn around $27 billion of income every single month to hit that full year figure. However, in the first 3 months of the year, they've only been hitting an average of $23 billion. So let's now have a look at the oil and gas income in more detail. Total direct income from oil and gas in the 3 months ended March 23 was 1.6 trillion rubles, or around $20 billion. And that compares to income of just under 3 trillion, or around $36 billion for the same period in 2022. So that represents a shortfall of 45% in the first quarter of this year. And if we look at the full year budgeted figure, Russia is expecting to earn 8.9 trillion rubles, or around $109 billion for the full year of 2023 from oil and gas income. And that means that Russia is budgeting to earn around $27 billion per quarter compared to the $20 billion that it achieved in Q1 of 23. So a significant shortfall against where the Russian state was expecting to be at this point in the financial year. If we now have a look at the non-oil and gas revenues, which relates predominantly to tax that the Russian authorities are receiving, you can see that in the first quarter of 23, total income was 4 trillion rubles, which equates to around $49 billion. And this compares to the figure from 2022 of 4.2 trillion rubles, or around $51 billion. So that represents a shortfall of around 4% in the quarter. And if we look at the full year budgeted figure, Russia is expecting to earn 17.2 trillion rubles from non-oil and gas revenues, which equates to around $210 billion, which on a quarterly basis breaks down to around $52 billion per year. So in relative terms, Russia is doing quite well in terms of its non-oil and gas revenues, which is slightly surprising because the oil and gas income is down significantly, almost 50% down year on year, and is significantly below the full year budgeted figure. However, the tax from the oil and gas businesses and other businesses is basically on track, which at face value looks a little bit confusing because the majority of Russia's income is derived from oil and gas. And as they're so far behind in terms of their direct income from oil and gas, it's really quite surprising that the tax revenues relating to oil and gas businesses are basically there or thereabouts in terms of what they'd budgeted. If we now move on to look at the income from VAT, and the Finance Ministry is quoting this as tax on production and import goods, you can see that in the quarter, the actual figure was 2.7 trillion rubles, which equates to around $33 billion. And remarkably, that's exactly the same as the figure from 2022, which is very surprising because when you look at the other figures in this table, the oil and gas income is down by 45%, and the non-oil and gas revenues are down by 3.5% against the period from 2022. So it does seem very strange that the tax on all of the income that's being generated in the Russian economy is exactly the same as it was this time last year, despite the fact that all of the other metrics are significantly lower. And when you look at the full year budget for VAT for 2023, Russia is budgeting to receive 10.4 trillion rubles, which equates to around $127 billion. And if you split that out on a quarterly basis, that equates to around $32 billion per quarter. So actually, on a full year basis, Russia is running ahead of budget. It's actually received more income through VAT than it's budgeting for the whole year, which once again does seem a little bit surprising and does seem a bit confusing when you look at the other income figures, which are all significantly lower than they were this time last year. And if we now look at the income tax figures, the total income tax in the first quarter was 340 billion rubles, which equates to around $4 billion. And that compares to 435 billion rubles in 2022, which equates to around $5.3 billion, and represents a shortfall of around 22% year on year. And the full year budget for income tax for 2023 is 1.6 trillion rubles, which equates to around $20 billion, which breaks down to around $5 billion per quarter. So the actual figure for the first quarter of $4 billion is running around 25% below where the full year budget needs to be. So the figures for income tax are broadly in line with what we would have expected, given the fact that all of the other income lines are significantly below this time last year and below budget. And again, makes it even more puzzling that the VAT figures are exactly in line with last year and actually are ahead of budget after the first quarter of the financial year. In terms of expenses, the actual expenses incurred in the first quarter of 23 were just over 8 trillion rubles, which equates to around $99 billion. And this compares to the figure of 6 trillion rubles for 2022, or around $73 billion, and represents an overspend of around 34% in the first 3 months of this year. Now, if we look at the budgeted figure for the full year of 2023, it's coming in at 29 trillion rubles, which equates to around $350 billion. And if you break that down per quarter, that would equate to $89 billion per quarter. So the actual spend in the first 3 months of 23 of $98 billion is a significant overspend and means that Russia is going to have to cut back significantly on its spending if it's going to come in anywhere near the budgeted figure of $350 billion for the full year of 2023. And of course, one of the main reasons for this increase in expenditure is because of the investment in the war in Ukraine. Russia is spending a significant amount on defense and military spending right now, and that spending is likely to continue for as long as the war in Ukraine goes on. And as it stands right now at the time of making this video, there is absolutely no end in sight in terms of that conflict. I've talked about this before in other videos, but when Russia invaded Chechnya, that war actually went on for more than 9 years. So there is a possibility here that we could see a very prolonged conflict in Ukraine, which results in a huge cash drain on the Russian economy and could result in many years of deficits. Now, we've actually got some detail on the level of state procurements, and you can see that in the first quarter, Russia's total spending on state procurements was 2.5 trillion rubles, which equates to around $31 billion. And that compares to the figure from last year of just over 1 trillion rubles, or around $13 billion. So that means that the spending on state procurements in the first quarter of 2023 was over 50% higher than it was in 2022. And if we look at the budgeted full year figure for 2023 of 5 trillion rubles, which equates to around $61 billion, Russia has basically spent 50% of its full year budget in the first 3 months of the year. So this indicates that it's very likely that Russia is going to significantly blow through that budget and spend a lot more than it was originally planning to do. So in terms of the bottom line for the Russian economy for the first quarter of 2023, the net deficit was 2.4 trillion rubles, which equates to around $29.3 billion. And when you compare that deficit to the position from last year, when Russia actually returned a profit of 1.1 trillion rubles, or around $14 billion, that represents a negative turnaround of around $43 billion year on year. So this time last year, Russia was in profit and had a very healthy economy. Right now, it's in massive deficit and things are looking very bad. And if we now look at the full year budgeted position, Russia is expecting to return a full year deficit for 2023 of 2.9 trillion rubles, which equates to around $36 billion. So the year-to-date loss for the first 3 months of $29 billion represents around 83% of the total full-year loss. So Russia is going to have to do significantly better in the last 9 months of the year if it's going to come in anywhere near the budgeted deficit that it forecast at the start of this financial year. So what's the summary and conclusion today? Well, I wanted to post this video to give you the latest update on what's happening in the Russian economy. And as I mentioned at the beginning of the video, these figures have been provided by the Ministry of Finance from Russia. They're not my estimates. I'm not trying to make up figures to try to make Russia look bad. I'm just reporting on the actual figures that have been posted officially by Russia. And as you've seen from today's video, the actual figures for the first 3 months of 2023 are significantly worse than the period from 2022 and also represent a significant shortfall against the estimated full year budget for 2023. Now, obviously, the main driver of the shortfall in terms of income has been what's been happening with regards to oil and gas income. If you've been following the channel, you'll be fully aware that Russia is currently subject to a variety of sanctions from most countries from the West. And over the course of the last 4 or 5 months, those sanctions have been ramping up. On December the 5th, the European Union introduced an outright ban on the purchase of all Russian oil transported over the sea. And alongside that ban, the G7 also introduced a price cap on the sale of all Russian oil, which was set at $60 per barrel. Now, in addition to those two sanctions, on the 5th of February, the European Union also introduced an outright ban on the purchase of all Russian refined products. So this is gasoline, diesel, kerosene, anything that's been through the refinery process. And alongside that ban, the G7 also introduced a price cap on refined products. So the effect of those bans and price caps are really starting to hurt the Russian oil industry. And this is obviously on top of what's been happening in the gas industry. Russia historically was the main supplier of natural gas directly into Europe. It had built pipelines all across the European continent and was supplying large volumes of gas. However, since its invasion of Ukraine, most countries in Europe have decided that they don't want to continue with those purchases, and we've seen the volume of gas drop dramatically, and that's having a big impact on the Russian economy. So the cumulative impact of all of these sanctions is now really starting to hurt the Russian economy. And we can see in the figures that we've been through today, the direct impact in terms of the 45% fall in oil and gas income. And that's also feeding through into other income. As we discussed earlier in the video, it does seem a little bit peculiar that the VAT figures are exactly in line with the figures from 2022 and are actually ahead of budget for this year. But putting that question to one side, the bottom line for Russia in the first 3 months of 2023 is that they are running a significant deficit. That deficit compares to a profit from this time last year. And if Russia continues making losses at the current rate, its full year outturn for 2023 will be significantly worse than the Russian authorities were budgeting. Now, as we've discussed in other videos, Russia does have significant reserves. At the start of the war in Ukraine, it actually had around $300 billion worth of assets located overseas. All of those assets have been seized and are frozen, so Russia doesn't have any access to that. But in addition to those assets, it also was sitting on around $150 billion of cash in its national wealth fund. Now, in the full year 2022, the Russian economy actually incurred a deficit of around $48 billion, and that deficit was funded using the national wealth fund. And as we've seen in today's video, in the first 3 months of 2023, the Russian economy has lost an additional $29 billion. So what that means is that since the start of the war in Ukraine, Russia has recorded losses of around $77 billion. So that equates to around 50% of the $150 billion that was sitting in the National Wealth Fund. And if Russia continues to make losses at the current rate, there is a very real possibility that the Russian state will run out of cash before the end of 2023. And I have made some other videos on this. One of the Russian oligarchs, who's very close to President Putin, has actually come out and stated this, that Russia could run out of cash before the end of 2023 unless it does something about the current situation. So the position right now from Russia's perspective is really critical. They're making huge losses. They've lost a lot of business in terms of all of the sanctions. They are trying to replace that business by doing more trade with countries like India and China. However, the problem that they're encountering is that the price that they're achieving for those oil sales is significantly less than the current market rates. And that's therefore having a knock-on impact in terms of the taxes and all of the income that the Russian state is earning. So this is a critical situation from Russia's perspective, and they really need to turn things around over the course of the next 3 to 6 months if they're going to avoid an absolute disaster and a complete crisis in the Russian economy. So I'll keep you posted on any further news and developments on this story. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to leave you with a smile on your face.